All right, welcome back. Just moments ago, the Reserve Bank announcing its repo rate decision. The bank cut the repo rate by a full percentage point to 5.25%. That's in line with the global trend by central banks to try to offset the impact of the very damaging coronavirus on business and consumers. Governor Lesetja Kganyago saying other risk factors are load shedding and electricity prices. That's on inflation. But inflation is well contained, he says, and food price inflation remains low. But some bad news for the rand, depreciating by 17.2% since January. So let's put all of that in a bag and try and discuss exactly what came out of this conference. Sifiso Skenjana is the chief economist at IQ Business. He joins us via Skype. Sifiso, 100 basis point cut. I know many economists were calling for it, some believing, given the conservative stance of the Reserve Bank, we wouldn't have seen it, but we did. How important is this cut?
No, it's very important. Primarily, as you say, that the history is that the Reserve Bank has tended to be a lot more dovish and a lot slower, I think, to respond, utilizing the monetary policy tools that are available to them. And it was quite interesting that last night, Ghana, I guess, was leading the continent in terms of reducing their borrowing rate by 150 basis points. And that truly was, again, I think an important statement to all the central banks on the continent, also to understand just the impact, particularly from a demand side, that some loosening or some liquidity injection can have for, holding the economies up.
Sifiso, just make some sense of what the on-the-ground impact would be. So from a very superficial point of view, you'd have more money in wallets of consumers that are paying a bond, for example, a vehicle, and that, in turn, it's hoped that consumers would use the extra cash to stimulate the economy. Of course, they need to get out of their homes to do that.
No, absolutely. So there are a number of channels through which we can imagine this taking place. So the first, of course, is in terms of fuel. We are an importer of fuel, and we know that the oil price at some point hit about $21 per barrel, and I think it's now sitting at about $27 per barrel. And so it means that at a minimum that we're going to be importing oil at a cheaper price, and that will result in us purchasing petrol at the bowser for cheaper. But of course, that will also be offset a little bit by a weaker currency, because we've seen emerging market currencies taking a hit. And South Africa is, as a proportion of GDP, we're the third largest oil importer as a proportion of GDP in the world. And so we are quite, dependent on oil, and so any movements there, I think, can be of benefit. Of course, then also at a household level, in terms of lower interest rates, it means that the cost of borrowing or cost of repayments is materially lower, and therefore there's sufficiently or a little bit more disposable incomes in the families. But again, we know that there are supply side disruptions that are happening because some factories are not, working optimally. We heard at the previous press conference that some of our factories are not, performing as badly as some of the global counterparts. But I think there certainly are supply side disruptions that are going to continue to come in, and that will also then have impact, for example, on the price trajectory of the goods that we consume. And so I think, on balance, this will certainly be positive for households. But as you rightly mentioned, that when we are at our homes and we're not consuming, then it is probably also reflected in the expectation of the economy contracting by not 0.2% for the year.
Right. Another very interesting point that the governor went to lengths to explain here when asked the question is that the Reserve Bank had space to cut by 100 basis points. Now, Sifiso, he's often criticized by being hawkish, by being conservative in the way he approaches interest rates. But had we not built up that space, like he says, we would have not been able to cut the interest rate by 100 basis points. So I think there's your answer. I don't know if you see it this way to that conservative stance that the bank had.
I think a little bit of the governor is drinking his own Kool-Aid in one sense, primarily because, we are generally a cost taker as an economy. And so a lot of the space that the Reserve Bank has in terms of maneuvering and utilizing the monetary policy tools are a function of what happens in global markets. And so when you start to see, for example, that policy is going to be accommodative for longer, that also has implications, on our rand trajectory. It's got implications on our inflation outlook. And the emphasis, for example, on inflation targeting is so important in the context of this conversation, primarily because that's pretty much the inflation path is what are the true north, I guess, that the governor and the Reserve Bank I think utilize to take the positions. And so I think there certainly is a lot of the developments that are happening with the developed economies that then did free up the space for them to do that. I think one of the interesting points that I might disagree with is around the capital requirements. South African banks are generally overcapitalized relative to the Basel recommendation, the Basel III recommendations. And yes, while we don't have a countercyclical buffer, it certainly means that there's an opportunity for banks to plan a downward trajectory on the current capital adequacy ratios to take into account, I think, the defaults that we're expecting to see, because the business liquidations that are going to come now in the marketplace are certainly going to add additional strain to employment expectations, to economic growth, particularly on the medium term. So all of these things in balance are certainly, as I was saying, that from the Reserve Bank point of view, I think there's certainly global developments that are informing the space that they had, not so much them having created the space themselves.
Sifiso, finally, I just want to get your take on how we use this interest rate cut. And I speak of all stakeholders, whether it's households and businesses. How do we use this interest rate cut to the best of our advantage, considering the COVID-19 environment at the moment?
So I think from a business point of view, it would certainly be important to use this as a means to create some capital buffers within your own businesses. As I said, that we are expecting continued disruptions on the supply side. Again, we also heard, of course, that Eskom is going to continue to be a challenge in terms of availability of energy. And so a lot of these economic disruptions are going to happen for businesses specifically, and I think it's important for them to create some buffers of their own. From a household point of view, certainly, I think, means now also to start thinking about a tough environment where, kind of retrenchments can start to come into play. And so what happens to household savings when that takes place? And so I think we certainly need to, move away from a consumption-first point of view around, and then thinking around creating financial buffers. And, we've seen globally as investors have ditched bonds as well to go for cash is something certainly leading towards the view that one's got to now start thinking around what does it mean to create some buffers that will enable you to have relative ease in terms of responding to any market developments that happen from now going forward.
Well, thanks very much indeed. Sifiso Skenjana is an economist at IQ Business, reporting, or actually just analyzing what the Reserve Bank governor announced a few moments ago, the repo rate being cut by 100 basis points to 5.25%. It essentially means that the banks will now have a prime lending rate of 8.75%. Tulis.